Let's bring another perspective. Mayuresh Joshi, fund manager for Angel Broking, joining us as well on this leg of the show. Mayuresh, morning. Thanks for taking the time out today. You know, if you look at the way the pre-open's panning out, you've got a 1%, 0.1% gain coming in as far as the benchmarks are concerned. And surprisingly, Bank of Baroda is actually seeing a little bit of a spike in the pre-open. And that's really been the big theme, isn't it, Mayuresh, in terms of the way the banking pack's been panning out and what we saw on Friday as well. Your thoughts on it?
Good morning, Priyank. I think the move related to the recapitalization of banks is very positive in our opinion. However, I think implementation is one of the key areas. Clearly, I think when you look at how the results have panned out, credit growth has been extremely slow. The conditions itself have not improved on a macro scale. You're still looking at stressed out sectors facing working capital constraints, iron, steel, real estate, sugar, and these are all the sectors where the asset quality concerns of the public sector enterprises lay. So clearly, I think the move is warranted because I think capital adequacy was required by these banks. How will it reflect in balance sheet expansion? I think time will decide. As on date and as we see the results, I think the internal accruals still seem seemingly weak, and our take is that if the capex cycle does not improve sooner than later, the stress on balance sheets of these banks will continue. So we remain extremely cautious on this space as on date, specifically with the run-up that we've seen in a lot of these PSU banks. But within the space itself, I think State Bank is something that we still continue and prefer.
Okay, well, some of those banking names stay in focus. What's your take on an HDFC as well, Mayuresh, given what we're seeing on the insurance side?
Good morning, Abbas. I think the sentiment move might come through, but clearly I think if you look at the various aspects on the mortgage business, stable set of numbers by HDFC. Asset quality has always remained stable for them. The growth has remained quite robust. However, I think valuations is the only concern that we probably got. Yes, it trades at a premium compared to its peers, but clearly I think the valuation headwind will persist for HDFC. So I think we've got a neutral rating on that stock. But when you talk about mortgage companies, I think LIC Housing is something that we still continue to prefer on declines. Our take is cost of funds have come down with the bank seemingly looking at bonds rather than high cost bank deposits. The yields have remained extremely strong at 10.85% in the results that have just gone by. The asset quality has remained very stable, and at 2.1 times price to book, I think it's quite reasonable compared to the other housing peers and specifically to HDFC.
What about Cipla? Blockbuster numbers from that one, Mayuresh. Any thoughts on that?
So yes, I think the numbers did exceed analyst expectations. It exceeded our own expectations as well. But again, I think the Nexium effect might start waning off in the quarters to come. What really happens with Metro is the other aspect that I'm more interested in looking at, and the kind of integration that these guys do. Yes, I think the opportunities are immense for Cipla. So if you talk about the CFC inhaler market itself, I think that poses a $3 billion opportunity. The UK market, specifically the combination inhaler product there, that poses a huge amount of revenue potential as well. But again, I think the sustainability to hold these margins at the levels that they posted a little bit difficult in my opinion. Again, I think the valuations are not supportive at this point of time. So unless I think the approvals start coming in thick and fast for Cipla, I think a re-rating from these levels is in my opinion not warranted. Yes, I think an up-move will be witnessed onto the stock with the result that we've seen. But largely, I think we still prefer Sun Pharma from the pharma space.
What about the, alright, just want to pull up some of the other counters from the pre-open out here as well. Tech Mahindra, PNB, Cipla, Lupin are all seen some bit of, are all in focus today. Remember, on the back of the way the queues have been panning out for a couple of these sectors. Banking counters obviously in focus on the back of what we saw on Friday. We're also keeping an eye on the exporters on the back of this portfolio churn that's underway as well. So keep an eye on the way that's really shaping up. Beyond that, Coal India, BPCL, Ultratech and HUL are some of the other gainers in the pre-open is what we're tracking right now. Bank of Baroda is the lone counter that's up over 5% at 6.2, 6.3% is what we're seeing. Among the weaker names, Z, Dr. Reddy's, Kane India and TCS are showing a little bit of a cut in the pre-open is what we're tracking. Let's see how the live trading shapes up and the kind of movement that we pick up on a couple of these counters in terms of trade today. Alright, Bank of Baroda still holding steady at 6.5% is what we're seeing. Just pull up that counter for you once again and get a mention there. It's the top gainer on the index is what we're seeing as far as Bank of Baroda is concerned. 7% higher now as far as that stock is concerned. Probably the big beneficiary out here. If I recollect, a week or so back, Goldman Sachs had Bank of Baroda as one of their preferred plays, is what we'd seen. Stock down nearly 8%. So I remember Goldman Sachs report talking about the way they'd actually been playing Bank of Baroda as one of the big beneficiaries of this entire revamp as well, with the new management coming in, with the recapitalization bit as well. Stocks up nearly 10% is what we're seeing. So once again, you're seeing some bit of a gain as far as the PSBs are concerned. Punjab National Bank and State Bank of India also seeing a little bit of a gain. But what's happening is that you're actually seeing some heavy cuts coming in on Cipla. Surprisingly 3% lower is what we're seeing on that counter. Vedanta, Kane India, DRL, Tata Motors, Reliance Industries down nearly 1%. You've got Tech Mahindra, ICICI Bank. So it's only the PSBs that are actually trying to provide some bit of comfort, but beyond that, it's a pretty weak start otherwise, is what we're seeing. 10% now on Bank of Baroda, 11% higher as far as that stock is concerned, is what we're seeing. Mayuresh, let's try and decode this, what's happening on opening out here, because it's pretty baffling. Cipla had a blockbuster set of numbers. What's gone so wrong? Why are we seeing a 3% cut on the stock today?
So as I mentioned earlier when we were chatting, our perception is that the margins will be very difficult to maintain for Cipla at these levels. And yes, I think even though the CFC market opens a huge amount of opportunity for them, they've got a huge amount of ANDA filings as well. So if I go by the last quarter's filing numbers, 147 filed, 79 approved. So there is huge scope within that segment itself. But again, I think valuations 25 times odd. The expectations are pretty huge. So I think let the approvals come through, and again, I think the margins looking very difficult. Because the one-off that we probably saw from Nexium sales, I think that will start petering off. And unless you get other approvals coming through over the next few quarters and start generating cash flows from these product approvals, I think very difficult for Cipla to actually maintain the valuations that they are deriving at the current juncture.
Okay, some of the stocks taking a hit on earnings. Amtech Auto, if we pull up that one for you on your screen in the mid-cap pack. And Punj Lloyd as well, down 13%. IVRCL is also down 5 to 6% today. Earnings impact coming in. There's some of these mid-cap engineering names as well. Mayuresh, let's get a check on you from that. And even an Amtech, for that matter, really taking a hit. We haven't really seen too much disappointment when it comes to auto ancillaries. This one bucking the trend there.
So clearly, I think weak set of numbers, and on all parameters, the interest costs have probably taken a toll on the bottom line. So clearly, I think within the auto ang space, tire companies is something that we preferred. They have run up. I think they corrected again. But clearly, I think I'll wait for further corrections because we almost hit our target prices on a lot of these tire stocks. But clearly, within the auto ancillary space, Forgings is still something that we continue to like. The capacity expansion is going to be pretty huge over the next few months. They're taking their capacity from 40,000 MT to 65,000 MT. 72% of the revenue is actually coming from exports, and specifically from the US markets, which have seen a huge amount of trend as far as growth in commercial vehicles is concerned. The numbers have been stacking up pretty well for Forgings as well. So our own take is a 14-15% growth in top line not ruled out, EBITDA margin expansion seen over the next few quarters. And this is one stock that will probably like in the auto ancillary space at this juncture.
All right, look at Bank of Baroda, 14%, PNB up 8%, SB up 3.5%, and that's still not helping the index, which is just up by 8 to 9 points, is what we're seeing. Because you've got Cipla, Tata Motors, Reliance Industries, Infi and TCS, all seeing some bit of cuts coming in, is what we're tracking so far. Mayuresh, what's your sense in terms of Bank of Baroda, PNB, SBI? Would you still look at these names, or it's just a little bit of a catch-up because the kind of underperformance that we've seen, you've seen some of these PSBs really erode on a YTD basis. Is this pure catch-up out here? Can somebody look at playing it? Do you foresee more upside?
So clearly, as I said, I think the internal accruals still seem weak for a lot of these banks. Yes, I think the asset quality might have stabilized, but it's more to do with the kind of slowdown that we've witnessed in their credit growth itself. So clearly, I think the focus is right, the intent is right. I think, but the kind of internal accruals themselves are looking weak. So clearly I think Bank of Baroda, PNB, large underperformers to a certain extent, valuation-wise looking extremely attractive even at this juncture. But again, as I said, I think we remain cautious. I think we need to see numbers come through, and numbers expected to grow over the next few quarters. But unless we see that happening on balance sheets, I think very difficult to give a very positive view. Yes, I think valuations extremely supportive, but I think we'll still prefer State Bank, as I mentioned earlier. But the balance sheet is stable, the capital adequacy itself is very strong, the return ratios are looking much stable, and again, on a price to adjusted book basis, it still trades around 1.1, 1.2 times.
Okay.
All right.
Just want to get the OMC pack going as well. BPCL is up nearly 1%, but the market now starting to once again dwindle a little bit. You've got nearly a 0.2% cut coming in, and markets just barely holding on to 8,500 is what we're seeing as well in terms of levels. ONGC, Vedanta, RIL, Tata Steel, Reliance Industries, some of the auto names like M&M and M&M also starting to see a little bit of a crack. L&T is around the day's low as well, or rather just moving into negative is what we're seeing. Want to put up the oil and gas pack, Mayuresh, as well. You're seeing that OMC has been one of the outperforming space, but you know, there are these articles talking about the way the revision of the gas prices once again could be a little bit on the lower side. Reliance Industries is somewhat weak. Your thoughts on this entire sector?
So clearly, Priyank, I think if we divide that into upstream and downstream, I think the downstream companies have performed exceedingly well. And clearly, I think the numbers are reflective of the fact, but whether GRMs will sustain is again a big question mark going forward. Clearly, the marketing margins have improved their overall performance for the companies, and clearly, I think with crude going down, under recoveries have gone down substantially, interest and finance costs have gone down substantially, their debt levels have gone down substantially, and the markets are largely factoring that in. So again, I think on the refining side of the business, I think not expecting the margins to sustain for a lot of these companies. A lot has also got played through in terms of marketing margins coming through. So clearly, I think they would more or less stay as trading plays. I think I'll wait for substantial declines on the downstream companies before taking a call. On the upstream side, I think the private refiner Reliance is something that we continue to prefer. Yes, I think it's a story that is expected to play out from FY17, but that's the way I think it has to be looked at. Quarter on quarter basis, I don't think it makes sense to look at a stock like Reliance. It might largely underperform FY16, but once the capacities start coming on stream on the latter half of FY16, first half FY17, the numbers will be much better. It will get affected even on the GRM side. I'm not denying that fact, but clearly I think Reliance still stands out within this entire space for us.
Just look what's happened at the index as well. You know, as we speak, you've got the index now suddenly down by nearly 1%. 84.45 is what we're seeing. Just pull up the benchmark for you. And Mayuresh, it's cooled off quite a bit. It's only the banking pack, and that too only 3 PSBs that are really holding on. Otherwise, it's been quite a weak start now that we're seeing as far as the index is concerned. Vedanta down 3, Z, Cipla, Tata Motors down 2.6%, ONGC cracking by 2%, Reliance Industries down 2%. You've got Yes Bank, Ambuja, GAIL, Axis Bank, Kane, Infi, all of them in negative and quite a bit. It's a pretty reverse picture to what we'd seen on Friday, Mayuresh, where the benchmarks were actually, you had only a couple of stocks losing out. Today on this Monday morning trade, you only have a handful of stocks gaining, and that too, that's the 3 PSBs there. Bank of Baroda, PNB and SBI that are showing some substantial gains, and that's the only support that we're seeing as far as the index is concerned, because beyond that, we're seeing quite a bit of a weak move. What's your call? What's your advice on the market here, Mayuresh, as we're counting down to you know, a couple of the other macro cues as well, and the global volatility playing out? Do you believe it's going to be somewhat of a weak environment going forward?
Clearly indicative of the fact, and I think if you look at the data coming through, negative WPI print of 4%, clearly I think the manufacturing print has not improved. CPI has cooled off, but clearly I think the RBI has more data points to look at. What the Fed probably hints at in its September policy is something to be looked at. And clearly I think when you're looking at the CAPEX cycle, it's not picked up substantially at all. I think if you look at the new order wins coming through, the number of projects which have got completed as a percentage of the total projects which are running still low, which indicates that the economic activity has not picked up meaningfully. Having said that, I think if you look at the way our currency is behaving, it's very natural with the kind of moves that we've seen from the yuan devaluation. So clearly I think you are going to see stress. I think the CAPEX cycle has not picked up, the investment cycle has not picked up, and we still need to see green shoots probably coming through in terms of data points. Having said that, I think the earnings itself have remained weak for a lot of companies within the steel, infrastructure, metal stroke infrastructure space, and that is indicative of the fact itself that it is going to take some time for earnings recovery to happen. So I think it's on a fundamental note that nothing has probably changed. I think it is more expectations rather than delivery at this point of time. So our take is still the same. I think we still believe that the markets will stay in this very broad range of 8100 to 8600 that we've been maintaining for some length of time.
Mayuresh, thanks so much for joining us. In fact, it's both the metals and oil and gas stocks that are driving the markets lower today. Metals, of course, is something we've been tracking, Priyank, but even the oil and gas heavyweights, ONGC, Reliance, not lending any strength right now. Add to that, Hindalco, Vedanta continuing the downfall that we saw late last week. So we're continuing to see quite a bit of a cut coming in. Vedanta down another 4% today.
That's right, another 1% cut is what we're seeing as far as the way the markets are panning out. And take a look at the weakness in the currency. You're back at that 65.24 zone is what we're tracking as far as the rupee is concerned. So it's been extremely weak there as well in terms of, take a look at the currency, 65.24 now in terms of the way levels are panning out, Abba.
All right, that's all we have time for on Street Smart. But do stay tuned. We've got In Business coming up next.
Thank you for watching.